Happy Wednesday, everyone. Time to sip your morning joe with a healthy sign of joblessness and inflation. At least your coffee will still be warm this winter because your house, probably not so much. Welcome to The Real Report. If you despise censorship as much as me, hit the like button, comment down below, and subscribe with the notification bell. Help out my channel and share with friends, family, your pets, news articles, YouTubers, all that good stuff. Now, we're going to take a brief look at the market because I need to start implementing more content so that when I get monetized, we can keep it that way. So real quick, as you guys can see this ridiculous rally here, we're looking at the NASDAQ 15-minute chart volume profile. We hit a new high today of 11,469. And let's see. In case you went into a coma back in about, August. Well, wakey, because we're right there. So if you guys have been in a losing trade for that long, you can exit about now. And a nice comparison here. We've got a chart mixed with the S&P 500, the NASDAQ, and the Dow Jones. Here's $1 million stock trading tip for you that I learned from the GOAT himself. Everything is just a rotation. You go up, you go down, you go up, you go down. And yes, you can time and trade these, especially depending on the environment. Of course, inflation cooled this morning, and bang, 3.5% rally. Absolutely ridiculous. This whole range has been a chop fest. Here you can take a look at the heat map. Of course, we're getting resistance at 39.20. Let's see right here. We've got the VWAP at 39.10. So we'll see if we can get some support and continue the rally, considering it's only 11 a.m. And there you've got some more buyers coming in. What I wanted to look at specifically, though, is the S&P 500's heat map here. Healthcare is starting to cool. This was all vibrant green this morning. Of course, information technology, consumer discretionary, industrials, materials, real estate, utilities, energy, consumer staples, and CS are all green. Of course, Apple, Microsoft, Google, Meta, Visa, Amazon, Tesla leading the charge. Now, getting into the information, now I will pause the wonderful song from AC/DC. Over 100,000 Russian troops killed, wounded in Ukraine, from top U.S. general. What the hell is going on in Ukraine? That's something that I would love to know. No matter how much I read, no matter how much information I get, boots on the ground, etc., nothing ever adds up, but I suppose that's the entire point of it all, no? I believe 2 weeks ago in the video, 15,000 troops total since the invasion were reported killed, and that was from the CIA. And now we're just getting these numbers up in the stratosphere. 100,000 Russian troops killed. I don't know about that one. Of course, Miley said that, so we can assume that we can throw that number in the trash. But that's not the only 100,000 number we've gotten out of today. 100,000 civil servants, latest to join UK strike. Some 100k UK civil servants on Thursday voted to strike in the latest industrial action to hit a country racked by cost of living crisis, which is going to be a reoccurring theme for this broadcast, which I'm going to try to keep shorter. So again, smack the like button, comment down below, subscribe with a notification bell. Public and commercial services unions working in 126 employer areas, Department of Transport in the UK's Department of Work and Pensions voted to strike, exceeding the 50% threshold needed to trigger a walkout. So it looks like that's a go. U.S. inflation eases in October, but still near decades high. So yes, it came down barely. The CPI that came out this morning, which is why the market rallied, rose 7.7%. from October 2021. However, we are still on, even though core CPI slides from 40-year high, real wages tumble for the 19th straight month. I'm pretty sure we're going to see real wages tumble for 2 years in a row. Obviously, we are 5 months away from that, but that's probably going to be what happens. Now, of course, CPI slid only 0.02, so nothing too crazy. And mass layoffs come to Wall Street. Citi fires dozens of investment bankers, but they're not the only ones. Twitter layoffs this month, 50%, Cameo 25%, Robinhood 23%, Intel 20%, Snapchat 20%, Coinbase, go look at the price of Bitcoin, by the way, somewhere about 15K. Told you. And Open Door 18%, Stripe 14%, Lyft 13%, Shopify 10%. Meta said thousands, but I've got the real number coming up in just a second. Apple hiring freeze, Amazon hiring freezes. And of course, Citigroup is the first bank to eliminate dozens of jobs across its investment banking division this week, and I assume a lot of mortgage lenders are right behind them. And so clearly you can see the economy's fine, everything's fine, market back to all-time highs, stonks go burr. Facebook owner Meta is laying off 11,000 staff. Notice here they said thousands to try and downplay that number. Yeah, well, it's 11,000. And he said the cuts represent 13% of the social media titan's workforce and would affect its research lab focusing on the metaverse, which has been a complete flop. And Redfin fires 13% of its staff, exits house flipping as downturn accelerates. So there's your first crack in the real estate. And credit card balances hit record $866 billion as consumers battle inflation. Again, everything's fine. Credit card and personal loan balances have reached record highs. Bank card rates balances rose 19% during the third quarter from a year ago, reaching a record $866 billion. And guess what? Gen Z, not only are they moving back in with their parents and getting squashed like bugs, they're also the most fiscally irresponsible, because Gen Z and millennial borrowers, whose balances increased, Gen Z's 72% is what their debt has gone up, and millennials has gone up 32%. Whew. Private label total and average credit lines have reached record highs, as well as the average number of accounts per consumer. And getting down here, credit card issued over the third quarter rose to 510.9 million. We'll just call that 511 million, up from 474.2 million during the same period a year ago. Credit card debt per borrower has risen from 4,800 to 5,500. The average personal loan debt per borrower is just over 10,700, and at the same time a year ago it was under 9,400, so it's up well over $1,000. Delinquencies, meaning late monthly payments, have also been rising over the past year, already passing pre-pandemic levels. And here's the silver lining: as long as employment numbers remain strong, there should continue to be a steady flow of customers seeking access to new credit products, credit cards, and personal loans in particular. Yeah, I'm going to call bullshit on that one. When your debt has already gone up to 74% of your threshold, you don't really have a lot of room to borrow. And then when your credit takes a hit, they're either going to pillage you at a 30% rate or just say, no, you're not opening another card. Skyrocketing inflation causing financial strains across all income groups, you think? 64% of all U.S. registered voters say high inflation is placing a strain on their finances. I'm sure anyone else is just unaware of what's going on right now and living off welfare. 36% said it is placing a major strain on their finances, up 4% from last year. 26% of voters earning between $100,000 and $150,000 reported that surging inflation is imposing major financial pressure on their families. And guess what? 54% of respondents earning under $60,000 said they were experiencing major financial strains, and I'm sure that number is only going to climb. Remember, the recession has barely started, and officially I guess it hasn't even started yet. So when you're already seeing 50, 60, 70, 80% of the country being impacted, wow, strap in. It's going to be a bumpy ride. And here's an interesting one, since I covered the election yesterday. Then we're going to talk about oil and gas and wrap this video up. Amazon's Alexa misinformed Tennesseans of polling hours on election day. So another wonderful perk of big tech, huh? Oil prices are primed to spike this winter. The EU embargo on seaborne Russian crude oil exports and the G7 price cap on Russian oil are both less than a month away. Global economic slowdown and weak oil demand in China have capped prices. Looming supply disruptions will likely send oil prices higher, and this winter is supposedly going to be worse than normal, but who can really know? A lack of refining capacity and crude oil disruptions will drive the price of fuels higher as well, particularly the price of diesel, which of course I'm bullish on. Less than a month from now, an embargo on seaborne Russian crude oil exports to the European Union will come into effect, and global oil supply is set to tighten considerably. Oh boy, and gas crisis wipes $100 billion off the German economy. The ongoing gas crisis has resulted in the German economy losing over $100 billion. The only time this figure was higher was during the second oil crisis of 1979 and 1981, another decade we keep coming back to. And the losses in economic output are about 4%, probably higher. Losing Russia as a supplier means that energy prices will likely remain high for the long term. So, again, Germany, you're hosed, you got thrown under the bus. If you don't find an alternate heat source, you're going to freeze to death this winter, and they don't care. There will be little they can do in terms of domestic economic policy to rescue the situation. That's from the German state. There's little they can do, aka you are on your own. Get independent. Government support measures cannot alter the level of real income losses. Wow, the first tidbit of honesty from any government in a while about the state of the economy. Government support measures cannot alter the level of real income losses. So with that, I'm going to leave you guys, and I will see you in the next one. Again, smash the like button, comment down below, even if you're lazy, hit an emoji, subscribe with the notification bell, and share with everybody under the sun.